And the person who actually goes and gets the asset, well, that's Colin. So he's still buying. Let's find out why. Colin, thank you so much for joining us here at Finance But Neat. Mate, Riley just made the case for why property still works. We've spoken to Laura to translate the CGT and the structure changes. You're the person who actually goes and buys the property. So let's get into it. My first question, and this is really off the back of what Riley said earlier, was investment grade assets are more important than ever before. And he mentioned it a lot. So what does that actually mean for you when you're physically going out and finding properties for your clients?
Look, from the very beginning, I've never seen the negative gearing as a huge benefit in purchasing investment grade assets in the first place. Of course, it helps. But one of the fundamentals and the foundations of how we assist our clients in purchasing investment grade assets comes down to four key, pillars. The fourth pillar is probably what I'm going to dive a little bit into now. More than ever before, investment grade assets for us means finding opportunities where we can manufacture value. It's being able to add a degree of potentiality in the property. It's having a different lens in looking at the property going, well, this property is great for what it is, but this is what it could become. So it could be as simple as, for example, a little bit of a minor facelift. We all like something that's sometimes a little bit newer and better. So it could be as simple as maybe a bit of a change in the flooring, a bit of a paint in the wall. I've noticed some properties are a little bit tired on the outside, so a little bit of landscaping helps. We've done where the roof looks just terrible, and so a little bit of facelift. It helps when you are getting a new tenant in the property that you could get a little bit more from a rental perspective, which ultimately increases your cash flow. But certainly from a configuration perspective, if you can change that, it just uplifts the capital and the equity within the property. All the way to as complex as potentially a subdivision. Now, you don't have to do it now, but it's purchasing blocks of land where at some point in time within your property journey, you could subdivide it. Because at the end of the day, if you're buying something that you could convert into something that's more, obviously that's going to uplift the valuation of your property. Where we see a lot of opportunity at the moment is a change in terms of something that comes down to an extension. We've seen a lot of opportunities where understanding the minimum requirements, the setbacks, adding a granny flat as an example is always a quick win. It's less complex. There's a lot of, opportunity for you to be able to get builders and people to go in there and construct a granny flat a little bit sooner than you would otherwise if you have to rebuild a whole house from scratch. So it's looking at the potentiality of the property.
Awesome. And so has the budget changed really that much with what you're recommending for your clients?
Interesting. I think the market is shifted a little bit into more of a buyer's market. So I'm looking at this opportunity in this season to be able to get a better deal. Where we've already had this team meeting where I'm suggesting to our research team if the offers are, for example, offers above 900, we could probably get close to 900. Whereas in the past, offers over 900 means the property could sell for 1 million or even much more than that. So I think sellers are a little bit more realistic about their price point. This week alone, we're noticing a reduction in terms of people going into the open inspections, which typically means there's going to be a lot less offers in place. Still strong offers, but just not the quantifiable offers that are in place, particularly when you're putting offers in with the open inspections that we attend.
Wow, awesome. I mean, that's a massive shift. We've been working together for a little while now, and that is really interesting to hear that there is opportunity to make more money when you buy, which I can't wait for you to actually unpack that in a podcast when it comes out in about a month's time. Mate, I would love to get an example of what you're seeing really great assets being bought at the moment.
Yeah, so we are now in a very interesting twist or shift in the market. I would generally say, as a rule of thumb, and just certainly in the type of properties we prefer to purchase for our clients, are typically landed properties on a decent block, say around 600 square meters. And over the last 3 years, it's shifted from 600 is the minimum price point to get in, 650, and then it was 700, it was 750, 800, and 850. I think that's going to pare back a little bit. We're seeing a few more opportunities where it's a 3 bedroom, 1 bathroom, that you can convert that into maybe a 3 bedroom, 2 bathroom, or a 4 bedroom, 2 bathroom. So there's a lot more opportunities for us to negotiate something around the 800 mark is where I'm seeing, a softening in the market, because I see there's a lot of fear and uncertainty. And so when there's fear and uncertainty, that's when I have a degree of faith in being able to negotiate a better deal for our clients. Some of the areas that we're looking at the moment is certainly out in Ipswich. You couldn't get anything for around 900,000 only 6 months ago. Now we're seeing a little bit more of a shift. We've managed to get a number of really good opportunities around the 850 mark, even at the beginning of 800. In where we have to go as far as Toowoomba to be able to get something around 850. We're starting to see the fringe suburbs, LGAs of Ipswich and even Logan. Now, Logan's still sitting above the 900 to 950 mark to get anything decent, but I think that's gonna shift a little bit, and therefore we're gonna see some opportunities open up within the Logan City Council.
It's a fascinating point because I think if I can take my broker's hat off for a second and just be a nerd when it comes to this sort of stuff, the interstate migration into Queensland has been so strong. The assets and the areas and the built-up areas that we have in southeast Queensland are really large local government areas, so you get great infrastructure across the board. And capitalism comes down to supply and demand. So often that we just have the demand for these properties again and again and again, it seems, in southeast Queensland. For me, it always seems a little bit of a no-brainer to be able to take that long-term view of get a property that's going to invest, or that's going to raise in growth and value, and the capital is going to gain over, not nailing that question, but it's going to grow in value over time, right? There's a segment of people out there going, well, CGT, it's kind of ruining this for everyone a little bit. Why we're not going to invest? What is your response to that approach?
Yes, so I mean, obviously CGT only applies if you sell the property. My philosophy is always buy and hold for as long as you require. It is an asset that you're ultimately building to generate a degree of passive income. So my philosophy is buy and hold. So if you never have to sell the property, then you shouldn't really worry about CGT. But if you have to worry about CGT because you need to consolidate your property portfolio, it's nothing we can change. But the reality is, the government's principles and philosophies change from time to time. I'm working within the framework of what we have with the current CGT exemptions. That's changing, that's for sure. But I'm still looking at capitalizing on the growth. Sure, we may not make as much upon the sale of the property, but you're still going to make money. And I'm incredibly grateful for whatever money that I can make on the consolidation of my property portfolio in the near future.
Yeah, and look, we spoke somewhat around property investing being a side hustle a little bit in the podcast that we'll release shortly. And I think it still remains that, I don't, even with the increase in CGT or whatever that looks like when it does finally pass the budget, it'll be really fascinating to see what that outcome is. But you're still going to make money. You're still going to win out of that if that is your portfolio that you're building to sell. It was just as an aside, it was really interesting. One of the things I raised to Riley was, what are the changes with P&I, IO, and that approach with the optimization, but of portfolios to reduce debt after capital growth and all that kind of stuff. And I think really it's actually bringing the focus back to your strategy: buy, hold, pay down debt long term. Mate, just to finish this all off, and thank you so much for your very, very, very small amount of time that you have in the day that you're spending with us. Why are you personally still buying property or wanting to keep investing?
Well, here's the thing. When there's so much fear and uncertainty in the market, I genuinely believe there is a shift. And let's be really open about the whole thing. The market is softening. It is going to plateau for a period of time. I don't know for how long, but the truth will always be that the demand is going to continue to outstrip the supply. I know that. The demand is there. It's a built-up demand. People are needing homes, which is something that I don't think people will ever give up. They may spend less on their travel. They may spend less on going out, eating out, entertaining themselves. these disposable income would rather be spent on still buying a place of residence. That's the security. That's the great Australian dream. So I don't think that dream will ever be given up. Of course, you're going to have to invest a larger proportion of your cash flow in holding your place of residence. So I think there is a period of time now where this uncertainty will mean that I'm preparing myself and my investors to get into the market knowing your numbers. So the negative gearing, of course, that's going to impact your cash flow because you're not going to get the tax savings from the government. CGT, if you sell it, well, let's do your numbers for sure. You're not going to go in blindly and go, what happens with the CGT? There's just a little bit of uncertainty about indexation and how that works. So I'm still learning. Let's be really open with you. And I've got 9 properties which I need to take into account what the CGT implication is going to impact me. From at home, this impacts me. But I am more confident than ever before. It's not because I'm just fully optimistic about this, but I'm getting myself in a position now to be ready to take on an opportunity when someone's a little bit more motivated to sell their property because they have to sell the property. And that's when I think, for me, I want to create a situation where I'm ready to purchase when someone's ready to do a deal.
Yeah. Look, a really great point was made to me earlier today that a couple is moving out of their home, clients of ours moving out of their home, living with some family. They're able to keep their property because they've got negative gearing holding it there, right? So to your point, that's going to be gone in the future. They're going to be people feeling stress. There's probably going to be some more distressed sales that we can take advantage of as people leave the market. So it's a really, really great point you make there. Thank you so much, Colin. Your wisdom, your knowledge, mate, that was incredible. I learned so much just listening to you talk. So thank you so much for giving us some of your very valuable time.
Pleasure, Alex.
That was awesome. Look, Colin said something that stuck with me there. When there's fear and uncertainty in the market, that's when he has faith. And I get that because the people who are ready when something else has to sell, those are the people who win long term.